Alright, I'm gonna do this video on Lucid, alright? Here's what we're looking at. So, we were a do-nothing stock here in Lucid after a crazy run from $10 to 60-some dollars, okay? Crazy run. And then, like all hype stocks, it just got obliterated and then did nothing forever. But, it's starting to reignite just like many hype stocks are right now. And you see it kind of break out of this consolidation area, or at least it's trying, especially on this candle here back in late October. It's trying to get out of that area. It popped out, but it popped out choppy. You know, two red candles with the pop out and then dropping back below that level, back below the official retest level. It didn't look pretty, but it's starting to run. And we got earnings coming up in 7 days, and we got a gap here to fill. The bottom of the gap is 44.17. And the top of the gap is just about $56. Now I believe it's a high probability it's going to fill this gap, and if you check on this tab right here, I did a search. How often do gaps get filled? Stocks. So what's that mean? When a stock price gap is observed by a chance of 91.4%, it will get it filled in the future. In layman's words, for you fucking layman's, 9 and 10 gaps get filled, and not always, but pretty close. So if you don't know what 9 out of 10 means, it means not always, but pretty close. Now I feel like that's a flawed statistic because obviously over the long term, most gaps are going to get filled. That's just stocks move a lot, so I don't know how they got the data. This one down here is 63%, but that's not the point of the video. Most gaps get filled, okay? I think you all know this. So today, this yellow line is my alert here. I started entering the stock and scaling in right as it was coming up above the gap level, the bottom of the gap, because I figured that was likely to be resistance. It didn't end up being too much resistance. We had one 10-minute close below that level after we had gotten strongly above it. So I entered during the first 10-minute candle, which I don't generally like to do, but I saw it pop above pre-market highs. And it's starting to run and it's looking good. I think I scaled more in right here as I saw it cross over it had an opening range breakout of the 10-minute candle. So opening range breakout is when you take like a 5, a 10, a 15, a 30-minute candle. You wait to see how it closes, what that candle looks like, and then the next candle, whichever way the stock breaks out to the top or to the bottom, that's the way you want to trade that stock for the day. So this one traded above the high of the 10-minute candle that we opened with, so I was long. So I scaled in more. I watched this pullback. I watched it pull back to my blue EMAs here. I held through that. It stayed strong on the greens. It had one close on the 10-minute bars below the green cloud, but if it's close like that, I'll watch it to see if it reclaims it. It reclaimed it. If it's not close though, I'll typically cut it on sight. The only reason I didn't do it with this one is because it was so early into the trading day, A, and B, because you have strong price level support here from the pre-market business. Alright, so I'm at a profit for most of the day. We got an end of the day pop, back up above high of day. So I scaled in a little bit here as well, which ended up not really being the best decision clearly, but I'm trying to hold this overnight. And my position size is based on the daily level. So my stops are set. I've got two stops for different parts of my position. I've got a stop set at 32.71 and a stop set at 35.67. Basically kind of like the lower to middle end of this range here in the flag, and then one below the low of the flag. So that's how I size my position. Looking to get up to the top here. If we get up to the top of the gap, I'll probably scale out a little bit, maybe a quarter of the position, and continue to scale out a little bit more as it falls, but I'm not going to scale out simply because it hits it, because if it goes to all-time highs, it's likely that it's going to go absolutely stupid. I mean, you got to break 50 to get to the top here. I think that's likely. Once you're above 50, 75 is not unreasonable. I mean, it's a hype stock, so psych levels are going to matter so much. 75 will be way up here. That puts your risk reward pretty nice. I mean, I don't know if I said it before, but if you were to enter now, you could set your stop somewhere in the middle of this gap. You could set your stop on the top of the gap where you kind of are going to have some support. But the risk reward, even if you're just going for the gap fill, is great. If you're going for 75 or all time highs at whatever level, this is a pretty good setup. So, peace.